The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Good morning, folks. Welcome to the Nadex Bull Bear Binary Option Hour with your hosts, Darrell Martin and Steve Rhodes. Thanks so much for joining us, folks. Darrell, how you doing today?
Fine.
Oh, that's great. Hey, folks, if you didn't get a chance to catch Tom on CNBC, just simply a fantastic, another fantastic appearance on CNBC. I hope they see his talent out there, so that he's a co-host one of these days out there. I'm sure that they are getting it together. So it'll be, I'm sure by the end of the day, be on the homepage at TFNN.com if you missed that out there. And as we come take into these markets here, you've got the Dow up 49 points right now, the composite up 17. Small caps are up about a little over 6. S&P's up about 6 points as well. But we're going to start off taking a look at the euro U.S. dollar currency pair. During the break here, was just chatting with Darrell. He had put some trades on this morning. In fact, he was putting on some gap fill trades. And so just a moment here, I'm going to have him go ahead and explain to him how he does that, because I know that's one of his favorite trading patterns out there. And it's a little different than the way that I talk about gaps on a stock chart out there. But I want to have him walk you through the gap fills, what it is that he's looking at. And if you haven't had a chance to test drive the Nadex platform, what I want you to do, and I want you to do it right now, I want you to go over to the homepage at TFNN.com and sign up for it. That's the first step. You got to take action. That's a small amount of action. And then Darrell does a show 5 days a week from 1 to 2 p.m. He's the warm-up band for the David White show out there, and his show is on, and Darrell's show
today.
Is... Huh?
And Nikki today.
Yeah. And so you've got and all those shows are archived, so you've got a great educational resource to learn how to trade the Nadex platform. During the 9 to 10 o'clock show this morning, one of the things that we were looking at was the euro. Now, if I put the euro on I'm going to put the 30-minute chart back on. If you are watching us on Tiger TV, folks, thanks so much for doing that. Maybe that you're listening on the radio or using TFNN.mobi. Remember, you can always catch the archive. Not the archive. You can always catch a live stream of this show by going to the homepage at TFNN.com. Over on the right-hand side, you'll see the button with the 3 little smartphones out there. Click on that. This show will go ahead and stream live to you. Why are we going to the 30-minute chart here? Because we were taking a look at the areas where the bulls and the bears were hanging out. The bulls here at a couple of different, we're looking at a 30-minute chart, we're looking at an intraday chart, a couple of 30-minute hammer candles that had formed yesterday morning at the 5 a.m. session, and as well at 6 a.m. And you can see that line here. If you're watching us on Tiger TV, I've got a line going across the low of the hammer candle from 6 o'clock. We can see that level was tested at about 3 p.m. yesterday afternoon. Currencies rule, and currencies were moving the market. The euro rejected that level, started moving higher. That's what eased some of the pressure off of the markets. That's where we saw the markets trade off of their lows. So, it is helpful to have the currency, or at least the queen, up on one screen or one portion of the screen as well. And you can see the euro came back down this morning and tested kind of a wide-ranging bar out there, but it still rejected that level. Told you that's where the bulls were hanging out, and the bulls gave way. The bulls gave way coming into that 10 o'clock close. We were looking to see if that area would hold. If that would hold, it was going to set up a possible long trade in the euro. Now that it's broken that level, what we're seeing here take place in this 10:30 session is we're going to see it probably try to test that level. And again, that level now, what was old support, remember, old support becomes what? That's right. It becomes resistance. So now it's a resistance area, and that level is 1.31664. So one possible Nadex trade on the euro. We won't necessarily look into that at the moment here because I want Darrell to explain the other trades that he put in this morning because he's always looking at these gap fills out there, and I want him to go ahead and walk you through that. But right now, the euro on a 30-minute chart has busted through an area of support, setting up lower price. Of course, you can see a little bounce going on. Why is that? Well, because you're getting the euro's getting into that oversold territory. So it may just simply move sideways here. Trading currencies is a lot easier to do during the week than on Fridays here. You got London. Everybody in London is hitting the pubs right about now, I would think, or shortly thereafter. And so on the currency side of the world, things should just kind of maybe ease off to the side. So, Darrell, why don't you walk people through, how what you refer to as gap fills and how you go ahead and trade those and how they can benefit from your knowledge, your education, and taking advantage of the Nadex platform to do the same.
Yeah. Basically, a gap fill is when there is a difference between the equity, or basically when the futures closed yesterday, the pit,
yep,
at 4:15 Eastern time, and then they opened again this morning at 9:30. Okay?
Yeah.
And so what is the difference between that price? That's your gap. All right? And you can use this on the S&P, the NASDAQ, the Russell, and the Dow. Okay?
And folks can follow along. You're going to show them how to do this on Tiger TV.
That's right. So actually I have my chart up right now.
Great.
You ought to be able to see that with all four of the major indices up there right now. And so with that, you can go up there and you can see basically the difference. And what you can do is, whatever platform you're using, you ought to have like an extended trading hour option. So like, in Thinkorswim, you can go to Style, you go to Settings, and then under, say, Futures, you can actually tell it to not show the extended session.
Got it.
And by doing that, it makes it a little easier to see the gap fill, or the gap itself, because you can see like it closed here and opened here this morning.
Yep.
Versus showing all the overnight movement. One of the important things to do is also make sure to pay attention to what's known as the settlement price. Okay? And settlement is different than close, or the last price you saw on your chart, because charts will often vary. Okay? And so you can get the settlement prices. There's a lot of ways to get them. We have them actually in our back office of the members area. So you can go over there, or you can go to CME Group, and you can literally pull them all up when it's a little bit of a pain. We actually post it every single night for you. But you can go in, and you can pull them up under equity indexes on CME Group, and then you can go to EME S&P dollar, and then you can go over to settlements, and it'll show you yesterday's settlement, which in this case, 1501 was the settlement price for, say, the S&P 500. And notice that's different than the last trade price, which was 1502. So this will often vary from, we can look at day after day. You can go back and look at the history, and, that one only varied by a tick, and it was on the ask side. This day it varied by 3 ticks. This day it varied by, 3 ticks. And a lot of people go, well, why does that matter? It's only a tick or a point or 3 ticks. Well, it makes a huge difference because the whole goal of the gap trade is to fill the gap. And so you need to know where that gap is and, be able to take it off when it gets there, okay? And, if you wait a point too, you may give up profit getting off a point too soon, and you may actually end up having a winner turn into a loser by waiting another point to get in too long because you were looking at the last price on your chart. And last price is not the same as settlement. On settlement, what they do is what's called a volume-weighted average price. And they take all the trades from the last 30 seconds in the day, and every price that every trade was executed at in the last 30 seconds, and they multiply it times the volume that was executed at that price. And then they add that number together, and then they divide it by the total volume, and the net result is what's called settlement. It basically gives a fair price. That's how they evaluate mark-to-market at the end of the day. That's how options are determined whether or not they're being exercised and what the settlement price or what the actual exercise price is on those. So it's a huge number. It drives a lot of things in the market. And so you want to be looking at settlement prices when you're doing gap-fill trades.
Now, at what time? What should our listeners be looking for? As far as the gap trade, at what point in time are you going ahead and entering that? What's the criteria that you're using to go? And do you play a gap play each and every day on each and every index? Tell the folks what you do.
I look at all 4 indexes. I do look at all of them each and every day. And we're probably going to do a course on gap fill trades. That's one of the things we're looking at doing pretty soon to go into more detail on it.
That'll be great.
And I don't play every gap fill. That's really important. So, but there's a few of the basic criteria, but I still filter them out from here. But a few of the basic criteria, because I know we only have so much time on here, and we want to do a big Q&A session and all that. But where you go in and the opening price at 9:30, that's when you're looking for the gap. And if the gap is there, then you can fade the gap. Okay?
Got it.
So now the other thing is when you're going in and you're looking at it is you want it to be, if you're trading on Nadex, I want it to be what I call 2 strikes wide. Okay? So like on the S&P 500, every like binary strike, it's 3 points wide.
Mm-hmm.
So if I want 2 strikes wide, I want a gap that's basically 6 points wide. Okay? Or wider. Now, at the same time, I don't want every single possible, gap fill out there. And so I'm also going to want to go in and go, you know what, if they're too big, I also don't want them, because if they're too big, they're probably not going to fill. There's a very low chance they're going to fill if they're too big.
Yeah, so there's a sweet spot, is what you're saying.
Exactly. There's a sweet spot, and you got to know what that sweet spot is. And, how to calculate it. One of the things I use my deviations, so it can't be bigger than a single deviation.
In order to fade that gap, in order to fill it back up.
Yeah, the deviations change from day to day. They're not always the same.
Yeah.
Like they were 9 points on Monday because the market had a half day. They were 12 points last week. They were 13 points yesterday. I think the S&P is 14 points today on a deviation. So because we take the implied volatility to calculate that. So it basically lets us know what's too big of a gap to trade. Because if you go in on too big of a gap, there's just too much momentum. And it may come back, but it basically doesn't fill the gap that's bigger than a deviation.
Yeah. Now, in that case, you're just doing a manual calculation because you're going to your standard deviations that you've already calculated. So you're
the implied deviations.
The implied deviation. Yeah. So you're already doing like a manual screen there.
Yeah. So I'm basically exactly. I'm going in. I'm going. Okay. Was it greater than 14 points? No. Okay. Good. Was it greater than 6 points? Yes. Okay. That's good. And then I go in, and from that point, then I can actually pick the binary or the spread, depending upon what's going to give me the best risk-reward scenario.
Yes.
On Nadex.
Yes.
And here's the beautiful thing about trading these on Nadex is a lot of people have, especially futures traders, have traded gaps or come across people who traded gaps. But trading gaps can be really scary if you're trading on futures because the whole idea is sell basically on the open and close when it gets to the gap. Well, what if, the market runs against you 3, 4, 5, 10 points before it comes back?
Yes.
Well, Nadex, that doesn't matter. And so I put trades on this morning. I have on some right now. I've already taken profit on the Nasdaq this morning.
And when you're doing those gap fills, because you're pointing out obviously the most beautiful thing about, or one of the most beautiful things about Nadex, the set it and forget it, and to not have to worry about your stop is your trade, as Tom says. So you don't have to worry about the extremes in the marketplace. Are you finding that there's a typical time frame? Is this a end of day? Is this a 4 o'clock trade? Is this a 12 o'clock trade? And when we get back from break, maybe you can answer that for folks. Of course, your screener does all the work for you. So it's part of setting it and forgetting it, folks. That's what Nadex is all about. But Darrell's got just an impressive tool that will help you to save time. And time is everything. Time is the most valuable resource that we have. It's time for us to go to commercial. 877-927-6648. Dow's up 42. Composites up 16 points. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connect sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Bull Bear Binary Option Hour, sponsored by Nadex, with your hosts Daryl Martin and Steve Rhodes, and we're talking about a trading system that Daryl uses each and every morning that he looks at using the Nadex platform. We're talking about gap fills, fading the gap, taking a look at the indexes, the index future contracts out there. So, Daryl, before we went to break, we were taking a look at, you were going to explain to folks or show them how you actually use your scanner tool as a part of being able to identify, the best trades out there. So take her away.
All right. So, one of the things I'm going to do is I pretty much almost always choose the 415 for the gap fills.
You do? Okay.
Yeah. Honestly, most of them are going to fill in about, I'd say on the stats I've run, it's like 84% of them fill in about 2.5 hours.
Yes.
Or less. So the problem is, like, the maximum you have, that's the average.
Yes,
okay?
Yes.
So it's not necessarily, you may have a lot that are less, and then you have a few that are longer, and then basically you have 2-hour expirations and you have the end-of-day expirations.
Yes.
So with that being the case, I usually find out that it's best to use the just the end-of-days. And so I'd go in on here and I'd basically just look for, the indices. So I can pull the indices up right there instantly. All 4 indices are selected.
Yeah, and this is, folks, this is the box spread scanner tool that, is proprietary that Daryl developed, and you can have access to it. Just go to the homepage of TFNN.com and sign up for it, test drive it. And you want to put this tool together. Maybe what your focus is just focusing on the gap fill trades. You've got something to look at each and every morning. You can make that part of your trading rituals out there. Go ahead, Darrell.
Yeah, I literally look at it every single morning. And, I mean, there are some months I get like 7, 8, and 9 of these trades off. There are some months, I only get 1 or 2. So, because it has to be very specific and meet the criteria, but it's another play in the playbook.
But that's the whole thing. It's nice to have. It's nice to have structure. It's like you decide to go fishing out there, and so you know where that fishing hole is. And if you got the you got the right temperature, the right, whatever it is, then you've got the probability on your side. That's what this is all about. It's nothing more than a probability exercise.
Yeah, well, and the reason that this works is because what happened was overnight the futures moved based on earnings announcements, all sorts of different things like that, based on after-hour stock trading, international stock trades that have happened, a lot of things like that. Basically, things moved overnight, but the stock market to the general public sector has not yet been open until 9:30 in the morning Eastern time, and so there's all of these limit orders that have not been filled. And the market exists for one reason and one reason alone, and that is to fill orders, to bring buyers and sellers together. And the market goes to where the orders are. And so if there are a bunch of orders below the market, because if the S&P moved up, there's 500 stocks that have orders sitting there that haven't been filled. Same on the Dow, same on the NASDAQ, etc. Okay? So all these orders are sitting there. All these guys want to get in. They have stop losses. They're just dying to get out. Different things like that.
Yes.
And so the market goes back to fill those orders, and that's what causes the gap fill. And there's a lot of times it'll literally hit it by a tick and flip back the other direction. So I really do get out, at the weight. A lot of times I'll get out if it gets within 3 to 4 ticks. Because sometimes it won't even quite reach it. Like NASDAQ this morning, it was like a tick off of settlement. You can see right there, if I maximize this. So right there, literally it's like one tick off of settlement.
Yes.
And I got out. I got out about right here. I had my order already put in there to get out. And because to me, it's not worth the last couple bucks.
No, of course. No. This is about getting the meat. This is about getting the meat.
And it's a really simple trade. You just hop in there, you put it on, and
so look, this morning, what kind of risk reward? Because as you're saying, look, it's easy with the tools that you have in order to filter out the criteria that you meet. And so give folks an example of the type of reward risk that was on there today.
Today, on every contract I put on, I had $25 or less risk, and my profit potential was $25. So 100%, basically a 1-to-1.
Yes.
And
this is a trade that works what percentage of the time for you?
Over the last 6 months, since I've been doing this trade on Nadex,
yes,
I've had an 82% profitable rate.
That's a nice thing. Hey, folks, get over to the homepage at TFNN.com. Do yourself a favor. Take a look. You'll see the banner there for the Nadex platform. Sign up, test drive the account. And look, folks, if you want access to some charts with some good data in there, just put a $100 deposit down. You've got access to it. That opens up a live trading account. Darrell Martin, Steve Rhodes. We'll be right back. We're going to go out to Bedford, New Hampshire, and talk with Mark about the Qs. Be right back, folks.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour with your host, Darrell Martin and Steve Rhodes. Let's go out to Bedford, New Hampshire, to our man, Mark. Mark, thanks for holding. Thanks for calling. We appreciate that. How can we help you this morning?
Well, I was thinking about you last night. I thought to myself, I'd take him to the hockey game last night after I listened to you yesterday.
Oh, good.
That lightning,
yeah, absolutely.
I would have liked to see that game,
Yeah. Oh, that's cool. That's great.
So I thought if I was down in Florida, I'd take Steve to see the Bruins and the Lightning and make him a Bruins fan.
You're the man. I love it. Thanks so much. Let's do that sometime. Come on down and visit us.
I will. That's what I'll do.
How's the snow? You guys had several feet of snow. Is that all melted away by now? Or?
Yeah, I have a commercial snow plowing operation with my brother that we do in the winter. I run a construction company with him.
Yes.
And we make good money at it, and there's a lot of snow to haul. But yeah, now we're going to get probably 5 to 10 inches this weekend, and it's just it's people don't like snow, but it makes you money and it keeps people working, and so whatever. We have the right kind of equipment, and we take care of it, and we enjoy it.
Now, is this an unusually high snowfall winter for you folks out there?
No.
It's not.
Last year it's like an average year. I mean, last year was really mellow, and this year there was last year there was excessively warm temperatures, and now we're just back to the norm. You get some big blizzards once in a while, but, everybody can handle it here. It's kind of like, it's actually fun. It's kind of like you stay inside, your power goes out, you hook your generator up, and you just go, so.
Well, I think it's fun, too. I just prefer watching it.
Yeah, well, that's the point, right? So, either way, I'll come down to Florida when I can, Yeah.
No, to me, there's nothing more beautiful than, one of the beautiful sights is being able to stand up on top of a mountain and ski down and look back at the village. There's just nothing better than that.
No.
Now, you want to look at the Qs. What are you doing, and how can we help you?
Well, last Friday I bought puts on the Qs. I bought the they expire March 7th, a Thursday.
Okay.
And these are the 68.5, and I sold half of them yesterday.
Good move.
To get my principal back, and I'm just trying to figure out what price should I try to shoot for the second half of these. I was thinking about $3.50 was a very conservative. Maybe I could get more. I don't know.
Yeah. Well, if we take a look at the Qs, so yesterday you were talking about hockey, and on the ice here, and yesterday the Qs by 1 penny really started to put that first crack in the ice. They closed at 66.47. And what I'm looking at here specifically on the Qs is the gap up from January 2nd, and that low 67. That low is 66.48. Yesterday's close 66.47. Now, even though it closed just below that level, the volume there didn't have the volume to drive down below that area, and so and what I'm referring to is the 70 million shares to the upside here on January 2nd. But it did close right below that. In fact, if I switch over to the actual index, to the NDX, what we'll see here is that closed even further below. The actual close yesterday was 27.11, and that was going against the low of 27.16 from January 2nd. So, what you are starting to see right now is a crack of that area, and that's a good thing. You go out to March on these, and what I would be looking for, I would be watching for the Qs or the NDX on their first test of the swing point high, or the gap up, I should say, high from December 31st, and that's right at about that 26.65, 73 level. On the Qs, from a volume standpoint, and what you want to be focused on there is if, in fact, the Qs continue to trade lower, and they trade lower and the entire time down, what they're doing, Mark, is they're trading lower with less than 70 million shares. Let's make it easier, less than 57 million shares, which is the December 31st volume. You're going to want to have a pretty quick trigger on that.
Yeah, I'm not going to get too greedy. I already doubled my money on and got my principal back. So,
and that's the nice thing about that trade. That's a great trade. You got a risk-free trade there. You've got your principal back. You're starting to see some cracks here of that support area. Would have been more bullish yesterday to have closed at 66.49 versus 66.47, but it is what it is, and it looks to me like really all that we're seeing today, is just a day of maybe some cause building. The market has come down pretty strong with some energy over the last two trading sessions here, and we're certainly, the bounce that we saw so far early this morning, that was a very predictable bounce out there, just simply using a set of trading tools that I shared with folks on Wednesday. So very predictable bounce, and actually we take a look at the ES Mini, it's run into its resistance area now. That used to be an old support line out there, and so I think you're in a good trade, and I know you're in a great trade because you've got no risk in this thing.
Yeah, that's the key to it.
Yeah, so I just pay attention to the volumes if the Qs get back inside that gap. But now, if the Qs have got good volume, more than 57 million, certainly more than 70 million, what will happen is your target then is going to be the December 31st low out there, and that's at the 63.58 level. And if we take a look at if we just take a look at retracements off of the November 16th, low to the high that was put in a few trading sessions ago, 63.96 would be the target. And if you're not around a computer, I'd go ahead and have a trade, already in there so that it can do the work, because you might be out shoveling some snow for all we know.
Yeah,
plowing some snow.
Hey, man.
All right.
Thanks
so
for
calling. Have a great weekend.
You too.
You bet, you bet. And as we let's go back and take a look at the euro, folks. Here now, I hope that you caught the first two segments of Darrell and I, because what he did was just great. He gave a great a synopsis and presentation on using the Nadex platform, utilizing a system that and scanning the system, looking for these gaps that fit a specific requirement, utilizing the Nadex platform. So absolutely fantastic information. If you didn't catch that and you're just tuning into the show now, make sure you catch the archive of this show. I believe the archive of this show is on channel 10 out there. So go ahead and check that out, or even as well. And it sounds like Darrell, you're going to try to put together a class on this or a workshop on this.
Exactly. Yeah, I want to put together a class and a workshop, and we're going to be talking to Tommy about that. I know we're going to have a couple of conversations. Just some of the things have some specialized classes.
Yeah.
Where we can just focus on, the A, B, C, D system to put together.
Yeah.
To actually trade on Nadex, and I think about putting together like 4 or 5 specific systems, not just like a strategy. I define the strategy is you can do a strangle on news, you can do a straddle, you can even do a gap fill play.
Yes, yes.
But the system is really where you get down to the nitty-gritty of it, and you put in, here are my rules for entry, exit, stop loss, take profit, risk management. Here's all the analysis techniques I need to use. So that's the system. And then the style is how to read the markets. So, that's a little bit more, that's where you go into things like deviations and things like that.
Absolutely. Absolutely. That's great. And, folks, I mentioned let's go take a look at the currency. Let's take a look at the euro out here. So we're looking back at the and this was setting up a great Nadex trade. I mentioned this before the last segment of the Trader's Edge show at 9 o'clock, because it was really great because we were able to identify areas of support and resistance. If those areas held, it would have set us up with a long trade. If the areas failed, set you up with a short trade. Right now, we can see the euro is trading back below that old support level, which is now resistance. When we were doing the first segment that we came on, what I said was, once you break a support level, what the market will typically do, in this case here, it did it on the very next trading session, was it'll go back up there and test that. And that level was the hammer candle. The hammer candle low that came in at 6 a.m. on the 30-minute chart at the 131,664 level. In that first 30-minute sessions, when Darrell and I were taking a look at the Nadex platform and how to set up a trade, you actually had the euro try to get up back inside there. It got up to 131,675, failed, and now you've got the euro moving lower. We take a look at the daily chart on the euro. One of the things you can see, there was this rising price channel here that took us back into the July 25th level, and the euro has broken through that. You can see it's actually below the 0.786 Gartley buy. So I'm going to go ahead and remove that from the system out here, from the screen out here, if you're following along with us now. When you take a look at different resistance areas here, you'll see price channels, which are diagonal levels, and then there's horizontals. Horizontal, either support or resistance. Horizontal, my experience is horizontal has priority over a diagonal type of resistance level. So, not the trend lines on a diagonal basis aren't good, but it's the horizontal that you want to pay attention to. On the daily chart, the next horizontal range happens to be this wide-ranging bar, this bullish engulfing candle that is out here. And I would use the low of January 9th. It looks to me like that is where the euro is headed to, and that is taking a look at the daily. Now let's take a look at the A to B equals CD down pattern that the euro here is forming. We know that the euro had completed a 1-to-1, and it completed that pattern yesterday. It's trading just below that. But one of the things, and Z in the den was asking, my thoughts on the euro. And one of the keys out here is really understanding, we talk about retracement levels, and those are natural places where you have buyers and sellers. Folks, like Darrell was talking about being able to exit one of his trades, a few ticks before the actual projected area. And I suggest that you do that as well. Why? Because, everybody can use the same type of systems out here, and no reason for you to be right at the last tick. So when we take a look at A to B equals CD down patterns, or 786 and 618, I like to be Jack Sparrow. And what that means is they're just guidelines. They're not exacts out there. And if we do take a look at and why you want to understand retracement levels is because they really help you understand the power of a move. In the case of the euro here, we take a look at that B to C retracement. And the B to C retracement took place from the low of February 8th all the way up to the high on February 13th out there, it only did a 0.382 retracement. Earlier in one of the shows, the morning show, I was talking about continuation patterns out here. Well, when you only do a 0.382 retracement, what you use that for, folks, is you use that to understand the strength behind a move out there. And when whatever it is you're trading only does a 0.382 retracement, and you've got a confirmed A to B equals CD down, it tells you it has a lot of energy built up. It's got a lot of room to run that relay race of the marathon. In this case here, you see a 1 to 1.272 A to B equals CD down on the euro. 130.637 is the target, and that is just below that is the last time here that we've seen the bulls in charge here on the euro, taking you back into that wide-ranging bar, that January 10th trading session out there. That is where the euro is headed to. And how can you use that? Well, if you go sign up for the Nadex platform, you want to test drive it, you can, next trade setup that I'd be looking for would be a euro trade. And we know where the target is. It's right in that 130.637, maybe down to 130.377. Of course, that's just short term. Longer term, I think we will see the euro continue to trade lower for the next several months out here. You can see even on the daily chart, it's got room to run before it gets down to that oversold condition out here. So that is on the euro. If we take a look at some of the commodities out here, let's take a look at Goldilocks. See what gold is doing here at the moment. Gold really just trading sideways here, so not doing much. Don't expect it to do too much today other than continue to trade sideways. It is trying to just build some cause to go down and at least test the lows of May 16th, but most likely bust through them. Came in there with a substantial volume over the last couple of trading sessions, so it is just building up some energy. Same thing on silver. We take a look at silver traveling sideways here these last 2 days trading sessions. Those are just signals that the market wants to pause, and if you get a close, it's really almost close to being there right now with a continuation pattern. And silver wants to get all the way back to the trading session of June 28th out there. That's at the $26.10 range. If we take a look at bonds, so let's look at bonds here. You got bonds yesterday moved up across the diagonal resistance area. That diagonal resistance or trend line was really taken from the highs of November 16th out there. That high was 152.21. The next area that you could tag is really the next high, November 28th, which also happened to hit the 1228, 1231 level. So you can see that is a diagonal trend line. Yesterday you have bonds getting above that. Now what we have out here is we've got Basil's 9-period EMA, and Basil is going to be up next, folks, after the next segment here. And now what we're going to see is we're going to see bonds walk that 9-period EMA and make their move up to the resistance level, that horizontal resistance level, and that's the gap. That is the gap that was generated on January 2nd. That is where bonds want to travel to. That is where our markets want to travel to as well. Everything wants to go back to January 2nd out there. Folks, go over and sign up for the Nadex platform. Test drive it, because there's plenty of trades out there. 877-927-6648. As we go into this break here, we've got the Dow up 61, S&P up 15. Don't be misled by this little bounce that we're having here in the marketplace. Intuitive Surgical up 10 points downside, leading the charge of the downside, Agrium. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, to the Bull Bear Binary Option Hour, sponsored by Nadex. Your host, Darrell Martin and Steve Rhodes. So good to be with you, and it is Fantastic Friday. And celebrating on this Fantastic Friday is the U.S. dollar index. U.S. dollar index, she is up and above. Of course, it is called King Dollar, so I suppose he is up and above a resistance area out there. And really, the King doesn't have any more real resistance until it gets up into the swing points out here. The next set of swing points takes you back into the August 16th level, right around $82.96. 83.06 is the .786 retracement out there. Now up once you get up and over a resistance area, assuming that the U.S. dollar index does close above this level, and when I say this level, the specific dollar amount that I'm taking a look at is probably 81.51. It's trading at 81.65 right now. We should expect that to get up and over a resistance area and then come back and test it to see if it holds as support. U.S. dollar index in the overbought area, so we should expect it maybe to just simply move sideways for a bit, but maybe not. U.S. dollar index is on its way to the moon. We know that the euro, we're saying we know. There's a chart that I included in this morning's newsletter for all my clients out there, and it's a tool. It's a way of being able to look at a chart, and when it specifically looks at the euro U.S. dollar, and when you step back and you take a look at it, you realize the patterns that are out there. You're like, wow. That's pretty interesting. Anyways, we do that here at TFNN all the time. Darrell did that for the first 30 minutes of today's hour. And, folks, if you haven't had a chance, again, go to the Nadex go to the homepage of TFNN.com, click on the Nadex button, and sign up for the Nadex platform out there. And, Darrell, any other trades or anything that you're looking at?
I do have two of the things I do want to share.
Yes.
One of the things that I monitor constantly is the Fed.
Yeah, good point.
And so I want to bring up, there's two things on here. If you go over to the NewYorkFed.org website.
Yes.
For all of our listeners out there, and under markets, you'll see a temporary and a permanent link. Okay? And you can actually see when they release, basically that they're doing bonds. They're doing purchases. And so you can go in here and like you can notice that they, what times they come out, like at 9:55 or 1:30, 1:45, like historically. And when they come out, usually the market stops moving down. I'm not going to say it like just surges, but it usually starts creeping back up slowly, okay? And, this morning we even had the same thing happen over on the permanent open operations. We were talking about that over in the den.
Yes.
And if you go into the links on that, you can see this morning at 2:22, outright coupon purchase at 10:14 a.m., done at 11. And we can go over here to a chart. And, it's really, it's almost a trading system within itself. But we go in here and we look at, basically 10, I'll put it on 5-minute bars. And right here at 10:15, when they started, I'm on 9:15 on Central here, when they started doing the purchase, and they released that they were doing it, that's the low of the day so far.
Yes.
And the market starts creeping back up. It doesn't mean it's not going to go, it's not one of the things you just buy and think it's going to the moon.
No.
It's where you tighten your stops. Like one thing I did on that on my gap trades.
Yes.
Is now I already closed my NASDAQ one out. I had a US 500. I had the NASDAQ. I had the Dow in. Is when that started happening, I actually went ahead. I already took the NASDAQ profit off. I took off the other two at break even or a small profit on those trades. So because I'm just like I'm not going to fight the Fed on it. Just move on. And so that's a very, very helpful tip whenever you're trading.
It is one of the best tips out there. Folks, Darrell will be back with you from 1 to 2 today. Following this show, we got Basil Chapman. He's up next. Nico and Paige from 12 to 1. David White, 2 to 3. Ken Shreve, 3 to 4. The Tom O'Brien Show from 4 to 6. Have a fantastic Friday. Look forward to seeing you Monday morning. Take care, folks. Have a great weekend, Darrell.